Yo. Mm. All right. What are we looking at here? Oh. Take a look at the daily time frame. Kind of consolidating still up in that 725 range. Nice little pullback. Could have been long there at 79, but it was too quick for someone to catch it.
The options in both futures also, they are just diverged so hard right before the open. I knew they were going to rip up at a high probability.
So they're diverging right now.
No, but before the open, the selling was thousands of contracts.
That's good to know.
Now it's just they both kind of.
They are pretty reliably spoofing to the upside, but it's only we're only 2 minutes into the session. It can change.
Well, with 1,600 tickers, I can only capture 68% of the volume.
Yeah, I caught the tail end of your conversation with I think it was Taco. You were talking with him. And yeah, we are kind of hitting a bottleneck, huh?
The problem is the problem is like, in order to properly do this, you're talking $400 a month in data.
Yeah. Starting to spoof both directions in this area. That was also heavy selling on the way down. More selling came in on the way down than on the way up. Grabbed along at 75, took it off for the point. We've got a bullish divergence on the ES delta. We're still heavy selling, but we're slowly grinding up into a reclaim. But that doesn't guarantee that we're going to keep going up. This could be a fake reclaim. Pulse check 73.50 short, but I'm just not crazy about it with that reclaim on our backside. I don't think I'm ready to short anything yet.
He has a custom study. Somebody asks you a question.
How are we looking at spoofing? Yeah, custom study that Fat Cat made, and it pretty much what I really like about it is it automatically adjusts according to how thick the market is or how thin the market is. We've tried to look at spoofing before, but the problem was we weren't accounting for liquidity, how thick or how thin the market is. So when price moves up on the important word I'm going to use here is relatively. When the market pulls up on relatively low orders, we consider that spoofing, or vice versa. If the market pulls back on relatively low orders, they're spoofing. They're pulling the bids or they're pulling the offers and making the market trade in one direction artificially.
I don't know what you're suggesting, but you're overcomplicating these things. If there is no order flow coming in on the options for that 30-second period on the time and sales, you print nothing. I don't know what you mean by guarantee unconditional, and it's kind of upsets me a bit that you've been building this wrong on the P2, P3 engine. I've been looking at the wrong delta. You must do it like a normal 30-second bar for the ES futures. Whatever Sierra Chart's standard cumulative delta volume study is, where it's showing the buy orders minus the sell orders every 30 seconds, you do that with the options, plain and simple. You don't add anything, adjust anything, do any other bullshit. And then you add the ES options with the ES futures every 30-second. I don't know why you are suggesting all this other crap. And when you add these suggestions, it just confuses me. And then now I'm realizing you're building something wrong, so I'm looking at the wrong data.
Uh,
I don't know what you mean by this paragraph, but if timestamps are coming in delayed, you need to back adjust the cumulative delta to make sure that all the timestamps are exactly on the specific bar period. So now is the current question is the version you already gave me, the P4 version, correct when I have it on combined mode? Elmer, he's looking at this column right here. It's delta leg, but you need to make sure, like, if you do it, it's I don't remember the rules specifically. You have to look. It's actually a lot more complex to get this correct. Problem is you shouldn't be seeing all this spoofing and fucking trading. I know it works, but it's just like I mean, there's days where the ES flow is high and it is respecting, but I mean, in reality, let me double check. Between Vanguard, iShares, SPY, ES futures, MES futures, MES future options, ES future option. Yeah, the ES futures options and SPX options. Give me a list of the total daily volume. Do an online search for each one of these. Also, you need to look at the SPY options, Vanguard options, iShare options, and give me those total daily volumes. Give it to me raw, but then give me a version where it shows the total daily volume notionally adjusted. SPX is double what an ES share is worth, so you need to round up or bring them upwards. So ES is 2 ES E-minis are worth 1 SPX option notionally. 10 MESs notionally are worth 1 ES E-mini, so that would be 20. MES are worth 1 SPX, so you're going to adjust everything notionally on the daily volume to match SPX. I know that SPY is about 502 shares, possibly, to equal 1 ES E-mini, so that would be about 1,004. So you can do the notional math formula based off of their prices, their closing prices potentially for the last session. Because I want to know how much of the volume is in the different baskets, as I believe the order books are fractured. You should use the free chat GBT voice of chat for Claude because it's better. And you shouldn't type it. You should just talk to it. The problem is, and some people have attempted to replicate what I've built, is if you don't know what the fuck you're building, you don't know exactly what you need, you're gonna... I mean, there's like it's gonna be all fucked up. Like, it's really important to understand how the time and sales works to run diagnostics through the message log or a custom CSV. You need to have Claude build in diagnostic tools or custom tools to make sure whatever it built is correct. Like this week, I'm going to backdoor into Tastyworks to try to get the SPX options. Because when I see these future options diverge like a reload divergence, it almost is always panning out. Unless ES is going the opposite way. But then there's times where these future options are doing something with ES and the price doesn't quite respect it, which is telling me it's the SPX. I'm trying to figure out. I mean, and these are there's 25,000 order books at any given day. 5,000 of them actually trade. And where the most of the volume is going is just a fucking guess. It can go anywhere. So this kind of proves the theory that volume can hide anywhere in these 25,000 option chain order books. So you can't, it's really difficult to track down where an institution or where the flow is coming in that's building positions. The theory is if I have all of it, you should see reloads or divergences where it's somebody is actually building a position and you should be able to trade that direction. The problem is there's so many order books are cutting it through all of those books, and you're never going to see a good enough divergence. Or if there's one diverging, like they're reloading an ES for a direction, they could be putting more on the other side that's flowing through SPX or something. That's the thing, Chronic. Your ABV diff goes down for weeks.
Mm-hmm.
There's more volume flowing through the stock options. You're talking 503 stocks with, let's assume, I don't think they're quite like that, but let's just assume 20,000 order books on their chains. You're talking 10 million order books just to fucking track down all the stocks, true volume. And there is more volume that trades on options than there are shares. So my thinking is, because shares have float, there's only so many in existence.
Mm-hmm.
Stock options can be exercised for 100 shares. There's something, instead of being cash settled, somebody can exercise you where you have to give them 100 shares.
Yeah.
So in theory, there's not enough shares. So if all of that exercised, which it won't, but if all of those options, all those 10 million order books or whatever, if they all exercise, it wouldn't be enough shares. The market is going up on nothing. Just like our money is no longer worth gold anymore.
Yeah.
Man, why is this taking so fucking long? See, this should be correct. This is ES combined with future options. And it's sideways, so that's telling me the future options are most likely going down, but yet the price is just going up. So Something's going on with the SPX or the MES. It's so fucked up. Like in order to, I mean, that's the thing is like Sierra's data is cheap. And they ticker limit you because if you're running too many tickers off their data, then theoretically you're using way more than what you're paying for. True CME data to be able to access all of these order books is going to be $200 a month. However, CQG counts one expiration cycle as one ticker. So all those order books in there, the hundreds of order books in there, count as one ticker. The entire. ChatGPT is useless sometimes. Like the thing is, when you guys are looking at flow, even you, Chronic, scalping these spoofs and shit, man, it's just like you're kind of just like trading no information. You're just trading these pockets of nothing.
Yeah.
I'm trying to figure out exactly how much data you're truly looking at. Is it a 10th or is it less? I have a feeling it's like a 20th. How can anybody make super? And the problem is they rotate in and out of these different, right? The volume is moving through these different buckets or these different products and shit, right? So sometimes this is why you don't have clarity some days. It's because most of the flow is not coming through.
Yeah.
What we can see. Okay, so here's the deal. Wow. Wow. If you guys want to look at my screen real quick, probably this is a pretty eye-opening. This is all notionally adjusted, so everything's rounded up to an SPX contract. SPX is 66% of the volume. That's how much we're not seeing. Look at SPY options, is 17%. So when you're looking at ES order flow, you're only looking at 8% of the fucking volume. if we combine this with this, the future options with it, you obviously get bumped up. What is that? Simple math. 15%. So what I have running right now is only 15% with this combined shit. I didn't realize SPY options were so fucking high. Because notionally they're 1.1 for just the share. This is you're looking at any given time 8% of the volume. You're making decisions off 8% of the data. All of you.
That's crazy.
It doesn't matter if it's deep out of the money. Does not matter. Because the bid offer spread changes. Give me a strike. What strike would be deep out of the money? Just any strike. Pick one. Today call at 78.50 SPX. Okay. Got you. Give me a minute. So sometimes the bid offers aren't changing if they're too far away. But it's still volume that's coming in the fuck now. You have to understand on that option chain, those bid offers are moving based off of the actual price moving on ES. Or the SPX is obviously a math formula, right? It doesn't move on order flow. You have to understand that SPX does not move on order flow. Yes, there's options on it, but it's a math formula based off of the divisor on the fucking stocks with the weights coming in. If you bought this amount of shit, if you bought an equal amount of, or you bought these specific weights of the stocks right now, this is where we would be. So you said 78.50. The fuck, yeah, that's way up there. So yeah, it's 20 by 25. But look at on the put side. That's an order book. That's an order book on the put side. Okay, I understand. Notice how those bid offers are changing. It goes 85 by 50, 85.40, 85.20, 86, 85. This order book is still on that fucking strike. I know it's on the put side, and I know the call side is not moving on its bid offers, but do you see how you have bid offers changing down here? If we go up high enough, that order book's going to come alive a little bit. So you got to understand there's 25,000 fucking tickers, right? Because this is a ticker. SPX 7850 is a ticker. It's its own order book. This is its own order book. So when you look at all of this, there are roughly 25,000 order books if you look at the entire SPX. Same with ES future options. At any given day, only about 5,000 of them see volume. But trying to figure out which ones I can track reliably, maybe 68% of the volume. But there's a huge swath of volume because we're scraping the CME every fucking day to see what tickers are experiencing the volume. At any given day, though, there are random places that we can't fucking figure it out. There's no pattern. See, that bid just changed. That bid's starting to come alive as ES goes up and the SPX go up because their price action looks exactly the same. As they're moving up together, this book is going to come alive. This book is alive. I mean, you're seeing quote changes the fuck all the way at 79.50. On the put side, I understand it's not, you know, it's out of the money, in the money. It doesn't matter. The fucking book is still just as far, if not further away than what you mentioned. And that book is getting quote changes. So the point is, it doesn't matter how far away you put an option trade on from here, from in the money, at the money fucking line. It doesn't matter because if I join this bid, I'm either paying $141 or $140 or whatever. The moment I put a trade on there and ES starts going up, because this is 79.05, that's really far away. If ES starts going up, this quote is going to change. So my position's either going to start losing or winning based off that quote change. Because this quote will start to change drastically if ES starts continuing the trend up. So look, you're out 79.10, you're at 144, right? Let's see if ES rips up. If ES can get above 90. This, it looks like this, so it's at 144, 143. So the quote change ain't going to be a perfect 1-to-1 the further out you go, but it's still a quote change. Like every option is directional. So if ES, and what I'm going to do is I'm going to put something right here so we can just watch it. So remember, it